Hey there. Buying a property subject to is a great way to get into real estate investing without having to take on a large amount of debt or even to apply for traditional debt. This type of purchase allows the buyer to take over the existing loan on a property without having to apply for a new loan. Of course, the seller would, be cautious to screen, just like you would do a residential tenant, to make sure that you have current payments on whatever debt you do have. But for all intents and purposes, the loan application process is a little bit streamlined, right? It doesn't take as long, and you're basically taking over the loan on the property that is currently existing to relieve the seller of their burden of paying, right? So it helps the seller out because the seller is no longer making payments. You are. The seller is no longer repairing the property. You are. And it works out well for both parties, particularly when you have a motivated seller, because the motivated seller is obviously not interested in making payments or repairing or placing things on the property itself. So, one of the main advantages, again, of buying a property subject to is allows the buyer to purchase property without having to qualify for a new loan. But it doesn't mean that the buyer doesn't have to worry about making payments. They have to make payments and they have to stay current. They have to upkeep the property, keep the insurance current on the property to make sure it doesn't, it's not destroyed, and the value is no longer there. It can't default on making payments because that would cause the lender to start to foreclose on both parties, meaning when you take a subject to, the seller is still responsible for the loan. The buyer is just taking over the payments. Okay. So the party in possession would be foreclosed upon also, meaning the buyer. But, in addition to not having to wait for the loan to be approved, which can even take weeks or months, and there's no assumption of the loan, meaning the lender is not looking to the buyer and their credit worthiness, that, the terms are definitely negotiable between the seller and the buyer, meaning the buyer doesn't necessarily have to put down a large payment or a down payment like they would in a normal sale or purchase transaction. Because, in this day and age, many buyers just don't have that amount for a deposit.